For New to Flood or Flood 101, we're really going to go over the basics of flood insurance and kind of what to expect if you're new to this world. You know, flood is not one of the easier products to sell, or that's definitely something you'll hear out there in the marketplace. But I can tell you, if you can get pretty good at it, learn the system and learn some of the ins and outs of a flood policy and coverages, not only can it be manageable, but it can actually be pretty beneficial from sales and growth perspective. So we definitely want to try to make this easy for you, but in no ways is this a complete education on flood insurance. It's a very high level, quick class today. So if you have further questions after what we go through today, please reach out to the team and we'll go over anything that you need, whether it's quote assistance, policy questions, coverages, etc. We're always here to help. We'll go ahead and get started. So some of the things we're going to cover today is obviously what are the basics of flood? What's the definition of a flood? What kicks in order to make a flood policy coverage kick in? Those kinds of things. Some basic policy information, some tips to know, things that might make selling flood a little bit easier, the basics around the E&O coverage around flood, and then quoting. So I'm going to see if this works, guys, and bear with me because we're having some fun with trying to play with Zoom here and doing some polls. So I have a poll here. Hopefully it popped up on your screen. But we're just checking to see kind of what your flood knowledge is or where everybody's at today. So if you wouldn't mind just answering, it really helps me. I love it. Give us another 10 seconds or so. Okay, so it looks like about 75% of you that have participated, about 30% of you are new to this, and the other 2/3 are kind of familiar with flood. They've done this before, and I've got a few flood professionals on here, which I love. So if I say anything incorrect, you guys are responsible for correcting me. Thank you so much for answering those questions. Awesome. All right. So we will move on. That was kind of fun. So who needs flood insurance? And really the answer we'll always give you is all owners of insurable property. It's the #1 natural disaster in the United States, and there really isn't anyone that's immune to a flood disaster, flood loss. We want to make sure as agents we're talking to everyone about flood, the risks around flood, and where they can obtain coverage, because as we all know, it's not a coverage that's found on standard market policies. In order for a flood policy to kick in, you do have to meet the definition of a flood, and that's important to know and just have some basic understanding around that. And the definition of a flood is the inundation of normally dry land that covers 2 or more acres or 2 or more properties. Now, we're most likely or most often going to come across 2 or more properties in terms of meeting the definition for a flood and a policy kicking in. And the way that works is, let's say, for instance, we have a heavy rain here and the street floods and the water comes up onto my property. Because the water crossed that property line threshold, if my home is damaged, my flood policy would kick in. It does state that the water has to cross the property line. It has to cover 2 or more properties, but it doesn't state that 2 properties have to be damaged. There only has to be damage on one of those 2 properties in order for a policy to kick in. 2 or more acres is a little more general. It's going to apply to kind of a more rural setting, but you're going to be looking for flood that covers 2 or more acres in the same general vicinity caused by the same flooding event. So if I own 25 acres and my home sits right in the center, in order for my flood policy to kick in, I'm going to need 2 or more acres of standing water or inundation of normally dry land within that same general vicinity caused by the same flooding event. Again, it doesn't have to be 2 properties damaged in that 2 or more acres, just has to have that inundation of water in that normally dry land in order for my policy to kick in. That water can come from the overflow of inland or tidal waters. So we often think of storms, hurricanes, storm force flooding and storm surge in that way, but it can also be the accumulation or runoff of surface waters, and it can be from any source. So we often think of a heavy rain or a downpour, but it can also be from a ruptured water main or an overflow of your neighbor's above ground pool. It doesn't matter where the water comes from. If it meets that definition of a flood, your flood policy would kick in. And guys, I do go pretty quick in this class because we don't have a lot of time. So if I go too quick at all, please stop me. And if you have any questions, feel free to throw them in there. Another thing we often talk about when we're working in flood insurance are flood zones, right? So what we most often run across are these high risk or coastal area flood zones. They start with A as in apple or V as in Victor. Those are going to carry those bank requirements for flood insurance. So if you have anyone who the bank is asking for them to get a flood policy in order to be compliant for their mortgage, they're most likely going to be looking for a policy with the flood zone that starts with A or V. If it helps you remember, A stands for the accumulation of water. So what you're often going to find with inland flooding, and V stands for the velocity of water. So storm surge, or where the water's coming off the coast, and those are going to be your coastal risks. What we don't see enough of, or what we don't sell enough of, are these low to moderate risk flood zones. B as in boy, C as in Charlie, and X. These flood zones do not carry a bank requirement for flood, but they do make up a significant number of claims annually across the United States. And we all know often flood areas that don't make the news. So it's not an area where agents normally think to sell flood insurance or will write flood insurance, but it's really important to be talking to those customers about their flood risk, whether it's low to moderate or high risk. Where can flood insurance be written? And it's important to note that it's eligible communities participating in floodplain management. When a community decides to join the National Flood Insurance Program, it's really a give and take relationship. The community says to FEMA, we promise to adhere to new floodplain management building codes and requirements, and in return, we'd like our property owners or policy owners to be eligible for the National Flood Insurance Program. That give and take relationship does come with new building code requirements, proper floodplain management, better infrastructure around flood management, things like that. And with that, then, property owners in the area can obtain a flood policy. Hopefully, too, with those new flood management rules and guidelines, those property owners will be in a better position, especially with new construction, in the event there is a flood. That give and take relationship is for the lifetime of the community being a participating member in the NFIP. So at any time, if they fail to meet those rules and regulations, the NFIP can actually suspend or remove them from the program. You can find out what communities participate in your area by going to the National Flood Insurance Program website. You can actually just search participating communities in the NFIP and that page will pop right up. I can also send it out to the group. But it's a great way to check which communities in your areas participate and which do not. And I can tell you I'm here in sunny Columbus, Ohio. Can't say that very often. We have 88 non-participating communities in the state of Ohio. It's pretty significant. Those areas are still mapped. A lot of those property owners are still in high-risk flood zones, but they're not eligible for National Flood Insurance Program coverage, and they have to look elsewhere. So it is good as an agent to know the communities around you and whether or not they participate so that you can actively have those discussions with your customers. If the community does participate in the program and that person is eligible for an NFIP policy, there are a couple of options available in terms of policy types. We first start with the dwelling form. It's going to be anything residential, anything that you live in is going to fall under this dwelling form. So whether it's a primary residence, a secondary residence, a vacation home, as long as it's a residential structure, you're going to fall under this dwelling form policy. The general property form is anything you don't live in. That helps you remember it. So you're talking businesses, churches, detached garages, boathouses, you name it. If you don't live in it, it's going to fall under the general property form. And then we also have the Residential Condominium Building Association policy, and that's the RCBAP. So those are specifically for condo associations. They're rather large policies. They can get up to $250,000 in coverage per unit times the number of units in that building. And then they can have one policy per building. So if that condo association has 5 buildings with 10 units each, they have that $250,000 times 50 units. So it's an opportunity for a condo association to obtain large amounts of coverage so that they're adequately covered. Well, let's go back to the dwelling form. Because this is where most of us as agents are going to be, it's important to understand how the dwelling form policy works. In flood, most policies are going to always pay out ACV for both building and contents coverage. Very different than what we find on the standard market side, right? But it's important to note that there is a caveat on the dwelling form for replacement cost coverage. If your customer lives there 80% of the time and they carry at least 80% of the replacement cost or max available, that building coverage will actually pay out at replacement cost. Only the building coverage, not the contents. So if they have a $400,000 house, obviously we can't carry 80% in building coverage or replacement cost there because the max we have is $250,000. In that case, they would have to max that policy out at $250,000 in building coverage in order to obtain that replacement cost coverage. I think it's really important to understand that replacement cost or co-insurance penalty on the dwelling form, because oftentimes when our customer comes to us and they tell us that the bank is requiring flood insurance coverage on the building, they only want to carry the loan amount, the minimum amount the bank is requiring. But oftentimes if they carry just a little bit more at not a huge change in premium, they can actually get better coverage and replacement cost coverage for the building coverage. So I think it's an important conversation to have and also document on your end from an E&O perspective. The general property form is going to pay out ACV for both building and contents all day, every day, regardless of the amount of coverage you carry. And the RCBAP, the condo association policy, also has a co-insurance clause or penalty. With these policies, there's some additional underwriting requirements, additional documentation that's required, and coverage requirements as well. So I would say that if you're going to write an RCBAP, please reach out to underwriting. We're always happy to help with one of those. They can be a little extra work, but I can tell you they're usually almost always worth your time. So if you run across one of those, please reach out for help. And I see in the chat, Leanne is answering questions for you guys. So thank you, Leanne, and continue to ask those questions in there as we go along. So I have another poll question. Hopefully, oops, sorry guys. Here we go. Do you know flood risk? Can you guys answer this question? True or false? If your home is in an X flood zone, you shouldn't purchase flood insurance. I love this, watching the tallies go up and down. If your home is in an X flood zone, you shouldn't purchase flood insurance. All right, we have about 75% of the people responding. So I'll go ahead and end the polling. And the majority here is correct, false. The answer is false. We're going to go right into that slide. Just because you're in a low risk BC or X zone does not mean you shouldn't purchase flood insurance. In fact, 40% of our claims between 2014 and 2018 came from these low risk BC and X zones. So we see the word low risk and we assume that the risk is nominal for these homeowners and it's not something we should be offering, but that unfortunately is just not the case. And depending on the location of the storm, these numbers can be much higher. I know Hurricane Harvey, I believe the overall preferred risk policy claim count was closer to 60%. So it's really important that we're talking to every policy or property owner about the preferred risk policy and making sure as an agent we're documenting that in our system. They only make up about 4% of policy count nationwide, even though they make up about 40% of the claims. So thank you guys for participating. This poll thing is fun. Maybe we'll just have a whole webinar of polls. Okay, so we did talk a little bit about the preferred risk policy. These are great. You can do them on both the dwelling form and the general property form. They are heavily subsidized, discounted policies. They come in packaged rates. So for the dwelling form, if you buy $250,000 in building coverage, you automatically get $100,000 in contents coverage. That does come as a package, and it's important because that also comes with smaller reduced deductibles as well. So these preferred risk policies can be purchased anywhere the customer's in a BC or X zone. There's very few questions needed to issue a preferred risk policy, no elevation certificates required. So they're great as far as the agent on your end, easy to quote and easy to get issued as well. The other nice thing to remember about flood from an agent perspective is it retains at about 90%. So once you get these policies on the book, flood in general has a really high retention. And so again, as we're looking from an agent in terms of what makes sense for us to sell, and when we're looking at policy portfolio, flood is a great add-on for an account. Another policy type is the newly mapped policy. So if your customer has gone from a low-risk flood zone to a high-risk flood zone in the last 12 months, they're actually eligible for essentially low-risk rates for the first year. So they are able to obtain preferred risk policy rates year one, and then those go up about 20 to 25% a year every year until they reach high-risk rates. It's really a way to ease policyholders into having to carry a high-risk flood policy without having to go right to a $1,500 or $2,000 flood policy out of the gate. It also gives them the opportunity to buy some contents coverage at a less expensive premium. So it's important to really talk to those newly mapped policyholders about those options as well. If your customer has been a customer of yours for a long time and never been required to carry flood insurance, and all of a sudden they come to you and the bank says, I have to carry flood insurance now, that's your red flag as the agent that they're most likely recently remapped or a newly mapped policy and they've dropped into that high risk flood zone. There are some nuances to flood insurance, some things to know and remember on our end. And again, today's kind of a quick high level overview of some of these, but flood policies are annual policies. They don't automatically renew. So if the insured or the bank fails to pay the renewal premium, the policy will not renew. So it's important, I know as agents, we don't necessarily chase down renewal payments and things like that because oftentimes they auto-renew. But it's important to note that in flood, if the policy lapses or cancels, any grandfathering or discounted rates they have are most likely lost at that point and we have to start over. So it's important to note that flood policies don't auto-renew. Renewals go out about 90 days in advance, but policyholders have a 30-day grace period. So 30 days from expiration, they can pay without a lapse penalty or cancellation. And that's important to note too. So if they miss their renewal date, they fail to pay on time, they do have 30 days to make a payment without a lapse penalty or cancellation. If you get out past that initial 30 days, the 30-day wait will kick in, and at that point, the bank will most times force place coverage at that point. It's also important to note that flood is a full premium policy. So that means we're required to collect full premium on all new business, renewals, and endorsements. So if you have requested an endorsement with underwriting and you haven't seen that bill or you haven't seen that endorsement come through, we're waiting on payment. And unfortunately, we are not allowed to process any of those changes until full premium has been received. So it's important to note in flood, it is full payment up front. As of right now, there are no payment plans in the flood program. I usually get that question almost every class. FEMA has thrown it around a couple times. I don't know that they've quite figured out a great way to administer payment plans, but unfortunately right now, flood is a full payment policy. We did have an extended grace period this summer due to COVID. It has officially ended for any policy expiration at this point, but it's important to note that any policy that renewed between February 15th of 2020 through June 15th of 2020 did have a 120-day grace period. So those June policies still have until October to make a payment without lapse penalty or cancellation. If you have any policies that renewed within this time frame that you have questions on, please let us know and we can check on this for you. But as long as they pay any time within this 120-day grace period, their policy will go back to the original inception date. And we are seeing that about 80% of the policies do renew within 60 days, even during COVID. So the retention remained incredibly high, despite everything that was going on in the world. Another nuance of a flood policy is the deductible. So deductibles apply separately to building and contents in flood. So if you have a loss to both building and contents, you will pay that deductible on both sides. It's important to note that if your customer wants a $25,000 deductible and they have a loss to building and contents, they now have a $50,000 deductible. I also always found it frustrating when a customer wanted an incredibly high deductible and the bank had a limit on which deductibles they were allowed to take. So if you're working on a bank required policy, I always found it helpful to send that quote over to the customer to share with their lender prior to issuing, because we can make all of those changes much easier before the policy is issued. So deductibles are one of those things too that the bank also can have control over. Deductibles can be increased midterm but not decreased. If the bank does require a decrease in deductibles midterm, we have to have a change request, a letter from the bank, and the additional premium. So it does come with a little bit of work on your end, which is why I always love to check on that prior to the policy being issued. Effective dates are also a little bit different. So there is a 30-day wait on most standard flood insurance policies. If it's not tied to a loan closing or loan transaction, we're unable to waive that 30-day wait. So I know we have loan closing here. I prefer the word loan transaction. If it's a new loan, a refinance, a line of credit on the commercial side, if there's a loan transaction or closing taking place that's initiating the requirement for flood insurance, we can waive that 30-day wait. We do have to have that lender information on the policy in order to make that change or issue that policy, but that is something we can do. Outside of that, most flood policies are going to carry a standard 30-day wait. And oftentimes when we get into hurricane season like we have now, we see an uptick in quote requests or policy requests from customers. Just keep in mind, if they're waiting for the storm, they're about 30 days late to get that coverage in force. And cancellations are also a little bit different. So no exception to all of other things flood, but again, something from the agency side that we've run into with lots of questions. There are 22 reasons you can cancel a flood policy. If you don't meet one of the 22 approved reasons to cancel a flood policy, we're unable to cancel that for you or give you any of your money back. So it's really important to make sure that if you're canceling a flood policy for one of your customers, hop into the system and initiate that cancellation so that we can tell you what the approved reasons are and what additional documentation is required to complete that cancellation. Always, always give us a call as well. We're happy to walk you through this cancellation process. What I always hated on my end as an agent was sending a cancellation request in and then receiving a multitude of underwriting requests back. If you send us a signed LPR, we're most likely going to send you a request back that says, why are you canceling? Please let us know which cancellation reason applies to this policy. Once you've selected that, we can let you know then what documentation is required. If they sold the home, we need a legal bill of sale showing the sale date and all the parties involved. They also need all signatures of all named insureds on the policy. So unlike a standard market home policy where we can take one signature, in flood, everyone has to sign. So if you can get some of that information on the front end before you initiate a change like this, I think it makes the back end processing so much easier for you and your customer and a lot less frustrating. So please don't ever hesitate to reach out regarding things like this because it really is very different than a home insurance policy. After this class, I will send out all the materials we've gone over today, but I also wanted to let you know that I'll send out the list of cancellation reasons so that everyone can keep that PDF on their desktop. If you ever have to go to cancel a flood policy, you can very quickly reference that document as well. And it'll save you 500 pages of the FEMA manual to find it yourself. So little light reading on a Saturday. I know we're going really fast, guys. I apologize. I want to make sure we get through the information. So there are some E&O concerns that we really want to make sure we keep an eye on when we're working with flood. And the first and foremost is failure to offer coverage. Talk to everyone about flood insurance. It's not an endorsement or a coverage offered on standard market insurance policies, and a lot of customers assume it's a covered peril. We know it's not as agents. Make sure you're talking about it, and better yet, document in your system that you had that conversation with the customer. There is no binding authority in flood. Without full premium payment on the front end, we cannot issue any changes, new policies, or endorsements. Flood is a one building per policy, one policy per building program. So if you need excess coverage for a large structure or high value home, or you have multiple buildings on a property, we have to either get an excess policy or we have to write a separate policy for each one of those buildings. Make sure you advise the insured of the 30-day wait period. We'd hate to have somebody misunderstand that and need a policy enforced right away, or the bank's requiring coverage and it's not tied to a loan closing and they hesitate to get that 30-day wait started. Make sure we advise the insured of the requirement to submit full premium payment upfront. Another really big one for me, and I think this is, I'm a licensed agent. I think I have similar experience as to a lot of you, but when we're entering information on an application, oftentimes we're pulling it from other places, maybe a home policy we've already written or information provided by the insured. But in flood, it's really important to make sure that we have the correct address, the correct zip code, the correct named insureds, because all of these things can impact a claims experience or coverage experience later on. If we transpose some numbers in the address or have the wrong zip code, maybe we get an incorrect flood zone determination. If the named insureds don't match the ownership on the property, maybe there's an issue at the time of a loss. So we just want to make sure, because we're working with a federally provided product and maybe not a standard admitted carrier product, that we want to make sure this information is accurate as possible before we get the policy issued. Make sure we're talking about coverages, ACV versus replacement costs, and when we can offer replacement cost coverage, and then obviously offer the preferred risk policy where eligible. And due to time, I'm going to skip our last poll question and leave you guys with our contact information. So please note that this was a really quick class. We're trying to try out shorter webinars just to see if it helps from a time and workload perspective. I know we're all juggling a lot right now. If you found it to be too short or not informative or helpful at all, please let us know. If you'd like to see longer classes, let us know that as well. If you have specific policy questions, please reach out to the team. Leanne is amazing. She's answering your chats as we go. She's my go-to for all things policy problem solving. So keep her name handy, Leanne Danielson. She's your flood guru for sure. But this is our class today, and I want to make sure we covered all of our questions. So we have a question here that Leanne hasn't answered yet. How would you explain FEMA-backed versus private flood? So a FEMA-backed National Flood Insurance policy is going to be underwritten and covered by the National Flood Insurance Program. A private flood insurance policy is going to be written on private paper on the excess and surplus lines markets. So usually a non-admitted carrier. The rates and coverages can vary between carriers as well as where they offer coverage. So whereas the NFIP is, for the most part, I don't want to say blanket coverage offered everywhere, private flood markets are a little bit different and they only work in certain markets. So sometimes you can offer private flood insurance to a customer, and sometimes the NFIP is the only option. It really depends on the situation. I have somebody asking about flood certificates to access the National Flood Insurance Program. So the NFIP requires a 3-hour CE course in order to sell flood insurance. Unfortunately, here at National Flood Services, we don't offer that CE course, but we can get some information out to you. Most states and the NFIP themselves also offer the CE. So we used to do it. Unfortunately, we can't hit the road the way we used to, and we are unable to offer a web CE version. So Wanda, specifically, if you have questions around that, we'll get in touch for sure. Another question, is FEMA-backed considered admitted? Well, yes and no. It's a little different than admitted, because typically an insurance company is working with an admitted product per state. FEMA's product is a federal product, so it's the same insurance coverage across all 50 states. So yes, I guess it's federally admitted, which is also why it's universally accepted by mortgage companies. But it wouldn't be a state admitted product the way state insurance would be. All the rates and regulatory pieces are actually run out of FEMA and Congress from Washington, D.C. So a little different there. Tons of questions. This is phenomenal. Were there any other questions? Oh, so I think Sarah here mentioned there's a huge price difference maybe between the NFIP policies and private product. You will find in certain areas the NFIP is less expensive, in certain areas the private product can be significantly less expensive. So yes, it really does depend, and that's maybe the other big difference between the NFIP and the private products. And private flood rules, eligibility, and application processes can vary significantly between companies and states, whereas the NFIP product is going to be the same across all 50 states. Once you learn it and you guys get really good at it, you're in the system and you're quoting, You can do it in any state. It's the same across the board, which makes it nice and easy. I have kept you guys 2 minutes late. If anyone has to drop, you're more than welcome, but I'll field questions for as long as they last. Anybody else have any questions? Feel free to unmute yourselves as well. What is the relationship between the NFIP and Easy Flood? We actually used to be owned by Aon, and Easy Flood is a product offered by Aon. So it is a private flood insurance product. Not all of our partners within our quoting system use Easy Flood, but if you happen to work with one of our carriers that does, you do have the opportunity to use that in there. And they're just another private flood insurance market. There's some questions around transferring policies. And I'm just going to cover that as a group so that you guys can all hear this. But if I'm selling my home and you're purchasing my home, I can actually transfer my flood insurance policy to you midterm. I need a signed letter stating that on this date, we're closing on the property, you're purchasing my home. I have to sign and date it, and you have to sign and date it prior to close. You got to get that back to us for processing. And we actually changed the name on the deck page to the new owner. There's one major drawback is the seller doesn't get any kind of a refund midterm. A huge pro is, I think, as a seller, it's a great selling feature to say I'm willing to pass my policy on to you. And the bonus of this is it's because flood policies are not rated on the customer. They're solely rated on the property. So we don't have to have any of your proper personal information, insurance scoring, anything like that on the policy in order to rate it. And we're able then to transfer that to the owner. So if you guys have any questions specifically on gaining access to the quoting system, running your first quote, maybe running a flood zone determination, or even pulling a deck page because you're new to flood, please reach out. We can do quick one-on-one sessions as well. Leanne and I both do them. You can get on our calendar. And we're happy to walk you through specifically something that you need help with. So please feel free to reach out. The email address here, agentdevelopment@nationalfloodservices.com, or even my email address, which I'll email you at the end of this class. And we'll definitely walk you through any of those specific questions. We want to make sure you have access to the system. And more importantly, once you're in there, you know how to use it. Another question. I have a property where NFIP and private flood carrier run out a different flood zone. So those are actually called flood zone discrepancies. And we come across them very often, whether you're working both in the NFIP product itself or between NFIP and private. Flood zone discrepancies are somewhat common because a lot of properties actually have more than one flood zone on them. So it's not necessarily that one's right and one's wrong. Maybe they're both technically correct, but we need to figure out what flood zone actually covers the building itself, because that's really the property that we're insuring, right? It's the structure. So oftentimes when we get these flood zone discrepancies, well, we can run a recheck. We can run further map information to check to see which flood zone is accurate. But ultimately, we also need to check with the lender, because the bank is the final say in what flood zone we're required to use, and also what documentation they will take for compliance purposes. So if you're working with a bank required policy and you're getting multiple flood zones, please reach out for help so that we can do a deeper dive and figure out which flood zone the structure itself falls in, so we can get proper documentation to the lender as well. If the lender's requiring flood insurance and you run a quote and it comes up a low risk B, C, or X zone, stop. Because that's not going to be a flood zone accepted by the lender for compliance purposes. We don't want to issue a low risk policy and have it not meet the bank requirement for flood. We want to make sure that we're getting them the proper coverages and they're not getting into a compliance issue with the bank and end up with forced place coverage, even though we tried to get them a policy in force. And as Leanne mentioned, we can recheck these and do map overlays and exhibits and provide that information to you so that you have some info to give to your customers as well. And Leanne is absolutely the guru at rechecks as well. These are fantastic questions. Anything else from the group? There was one other question regarding the definition of a flood and whether or not a policy would kick in. and it has to do with the water crossing 2 or more properties. So as long as the water crosses that property line, whether it's the road onto your property, or let's say you're in a subdivision and the water crosses from your yard into the neighbor's yard, the policy will kick in, even if only one structure was damaged. So please keep in mind whether it comes up off the road, overflowed sewer, overflow from your neighbor's yard, it doesn't matter. As long as it crosses that property threshold and there is a damaged structure, then the policy will kick in. Is it structure damage only? I guess, Annette, can you expand upon that? If the structure is damaged, the coverage will kick in. If it's contents and structure, oh, I'm sorry, landscaping. So landscaping and property are not covered on a flood policy. It's only going to be structure. So yes, structural and contents damage only covered on a flood policy. Great question. Any other? Do you recommend elevation certificates? Elevation certificates are required on newer construction in high-risk flood zones. It goes back to when the community joins the National Flood Insurance Program, and there's new flood building codes and requirements. That's really how FEMA polices the community to make sure that they're following the rules. But it's also how we rate a policy. If you're working with a pre-firm structure, maybe an older structure in a high-risk flood zone, elevation certificates are usually not required. As to whether or not we recommend them, it really depends on the property itself. You know, where I live and work most often, most homes around me have a basement. And elevation certificates are always going to rate from the lowest floor, which in our case are homes well below ground. So unfortunately, it's not often that an elevation certificate is beneficial for a home with a big basement. I don't want to say blanket, but most often. But if you're working in a high-risk flood zone where the home is relatively elevated, the property is elevated, and it doesn't have below grade basements or crawl spaces, there's a good chance it's always worth a try. Elevation certificates can run anywhere between $250 to $1,500 to get done and up from there. They can take anywhere from 2 hours to complete, depending on the location and the topography and the landscape, to 2 days in West Virginia, where they have to go over, you know, elevated mountainous region to complete one. So it's not a one-size-fits-all answer on that. If you have questions on whether or not an elevation certificate might be beneficial for your customer, please let us know. We can help with that. Leanne mentioned the LOMA process, which is a letter of map amendment. So if your customer wants to figure out how to get out of a high-risk flood zone and their structure is elevated, sometimes an elevation certificate and help from a surveyor can help them complete that paperwork and go through the review process with FEMA. So there are a lot of options we have. If you're working with a customer who is adamant they shouldn't need flood insurance or their rates are incredibly high, please reach out, because there are different things we can do, whether it's elevation certificates, LOMAs, grandfathering, map rechecks. It's not necessarily just what's in the system. There's a lot more at our disposal behind the scenes as well. Leanne is all over the coverage questions. One of the questions is, where can I get a complete list of coverages? There's a couple of different places. You can always use the FEMA manual, not an easy read. There is a document I like to send out with flood quotes called a summary of coverage. It's the cliff notes of what's covered on a flood policy. It also explains the definition of a flood, some common coverages, things you may run into at the time of a loss. It's a great little guide to give customers. So when you send out a quote, if you ever want to send that summary of coverage with it, it's a quick PDF document. I will send that out to you guys so that you all have it. And it's a great reference for you as well as to some of the common coverages and things that aren't covered on a flood policy. It is limited. You know, one thing that I always use to remember is the flood insurance program was never really intended to be a permanent solution for flood, right? That's something we always teach in our CE classes. But here it is, 40 years later, and it's still the predominant source for flood insurance. And so unfortunately, the program isn't really designed to make everyone whole again. It's not like a home policy where we're gonna put you back in exactly the same state you were in prior to the loss. A flood insurance policy is really intended to get you back up on your feet, get the home cleaned out and back to a livable, manageable state. And then unfortunately, some of those pretty finishings, jewelry, landscaping ends up falling on the homeowner to replace themselves. So although it's not perfect and it's not going to cover everything, it's still the only place to get any flood coverage at all. So I guess in my mind, some is better than none, but unfortunately, it's certainly not perfect. Got a question on deductibles. So deductibles do apply separately to building and contents. There are deductible options based on the amount of coverage that you've selected for the quote. So if you're in the system and you're quoting and you select a deductible and it's ineligible for the policy or property type that you're working on, the system will auto-correct you and give you your deductible options. Again, I would always check with the lender before you issue anything to make sure the deductibles are acceptable, because some of them go up to $50,000. And that doesn't always make a lot of sense depending on the coverage requirements for the policy. Any other questions? I love this. So I think you've answered my one question is, should we make this class a little longer? And I think the answer to that's for sure yes. We're also going to break out, especially for those of you that are brand new to this, some of the basics around logging in, getting set up. We did a quote week a couple weeks ago where we walked you through quotes. So we'll do some more of that again. So please keep an eye out on our website for additional trainings, because we want to make getting into flood as a new flood agent easier and a little less scary for everyone. Love it. Any additional questions? Keep them coming. So I owe all of you a copy of today's presentation, a copy of the cancellation reasons from the FEMA manual, and the summary of coverage PDF document. And I will get that out to the group by the end of the day today. But again, if you have any questions in the meantime, check out our website. We've got short videos and training on our website available free of charge. We've got sales and marketing tools available there for you to use all the time. You can use them in your LinkedIn, Facebook, or Instagram pages for marketing, as well as email. And please check out the website. But if you need help logging in or need any help in the meantime, reach out to myself or Leanne and we'll help you guys out. And thank you all so much. This was a lot of fun. Have a great day. Oh, thank you guys. I love all the feedback. I really appreciate it.